Hey everyone, this is Ben from the All in the Reflexes Substack. You can find me posting every 1 to 2 weeks or so on my Substack, and I'll post usually daily several times on X, just an easy way to get different charts and ideas out there quickly. So if you're interested in this content or any of the other things that I share, that's where you can find me. Nothing that I share is tailored advice to anybody's portfolio or a recommendation for somebody to make a financial decision. I'd like to keep an ongoing log of my ideas and thought process towards the market as I continue to grow. And questions and ideas that I get from others are just tremendously helpful. So that's the purpose for sharing these things. So I'm doing this video update because I saw a video on one of the dividend investing groups where two gentlemen go through a handful of picks and ideas that they have for longer term dividend growth, and that's a strong part of our long term portfolio. Even though I post a lot of short term technical analysis and market structure types of content, fundamental investing and dividend investing are core to our long term process. So two folks that shared those ideas. Two folks that shared those ideas were Jeremy from Dividend Stockpile and the DGI Crab. You can find them at these links. I'll also post those in my update. So, like their thought process, they each went through fundamental justification for the picks that they were sharing, and what types of portfolios and time frames for investing they might fit. I'm not affiliated with either of them. They didn't ask me to do this. Hopefully when they see this, or if they see it, they're not pissed off. I just wanted to take a different spin on looking at those types of opportunities and where what types of trend and price behavior I would look to see a company and opportunity that's a fit for my process. So fundamental investing or fundamental analysis and dividend growth as a strategy are important to our process. I think they're traits of well-run companies, and when things are in uptrends, they can steadily feed new information and catalysts to keep uptrends going. What I don't like about the fundamental side of things is valuation is not a timing tool, and I've said multiple times in this channel that we know that trends are persistent, right? And so when we're looking at things that are undervalued, that's a trend. So price is in a downtrend, and if we're looking to buy things that are in downtrends, we know those trends can persist for a long time. And fundamental investors will frequently say time in the market is better than timing the market. Also something that I personally disagree with. I think if you've got the skill set and the time and aptitude for it, we can certainly time the market. We can do it from a risk management standpoint. We can do it from a profit maximization standpoint. But the contradiction here is that the reason that time in the market benefits a lot of fundamental investors is because the uptrend in the market is persistent. If we're looking to buy things that are undervalued, we're looking at downtrends, and those downtrends are persistent. So we're counting on that downtrend reversing at some point, and those undervalued opportunities becoming equally or overvalued. And valuation is just not the tool for that type of timing. Very strong fundamentals can also be a little bit misleading if you've got a very strong company like Apple that happens to be in an exuberant phase of its uptrend. It gives us a false sense of security that will stay overvalued or continue its growth path, but and make it harder to see the risk. Whereas if we're in a shorter term trade with, say, a quantum name that's pre-revenue or running at a loss, if that goes into an exuberant uptrend, it's easier to take, for me anyways, to take profit than it is to do so for like a Microsoft. But anyways, enough of that. We'll get into the chart review. So I'm going to use a handful of tools to look at each of the 8 stocks that they shared. I won't go through the cycle analyzer for each of them, but what I've done is This is the tool from the Foundation of the Study of Cycles. I've taken a look at it for each of the 8 stocks to identify the longest cycle with longer cycles with high stability scores and a strength of fit for the trend. And so in this case, one of the picks that we'll look at is MKTX. It's got among the cycles that the automated detection works with, it's got a 194 period cycle that has a strong stability score. It's one of the top 3 cycles that are a fit for for the time series of price history. And it builds a composite if you select multiple, and that can give us a more correlated cycle with a better time frame. But in this case, I'm using it to identify a single fixed cycle that will overlay as a reference point for some of the other chart and trend data. So this won't be a full-on cycle analysis, but it'll be using cycle as a reference point to help us anticipate timing. So that'll be our overlay for timing. We're going to look at trend, relative strength, and psychology of crowd behavior in markets to help us with each of these stocks. And so what we're doing before getting into cycle, trend, relative strength, psychology, what we're really asking is what evidence tells us that trend is changing or favorable for us. And when I ask that question, I'm not looking for a prediction, I'm looking for a scenario. And I say this frequently, like I want a scenario that I can anticipate, and then I have a scenario that I know how to work with if that scenario unfolds. If the scenario does not unfold and it does something different, then I don't participate and I need to reevaluate and potentially move on to a different asset. So I'm not in the market to be right. I'm in the market to make money, and I can make money when I see scenarios that I know how to work with. So we're going to spend the most time on this chart because we're just going through the methodology, but we've got, when we look at trend, I'm looking at 3 things. We've got the 65-week moving average, and that's the blue line, and a 10-week moving average of the 65-week moving average. So we're doing this on a weekly chart, and we're using a weekly time frame for EMA. And the reason is because these are fundamental opportunities. We don't want to be whipsawed or shaken out of things, and so this gives us a clearer view of the primary trend. And these little downtrends that we've got, these are actually lengthy, right? You've got a downtrend back here from, this is the COVID drawdown, right? So you've got from March, and it remained in a negative trend until October. So you've got like a 7-month downtrend that happens again 2023, and this is a 6-month downtrend. So we don't really want to get shaken out of stuff like this, but it's not. We can't necessarily enter with confidence when you've got a declining 65-week moving average, and you're not clear, whether it's going to reverse or not. So we're looking at 65-week moving average. We're also looking at this first indicator is ADX. That's the average directional index, and that is strength of trend. So in this case, the black line is the average of the directional indexes, and it's going from a low to a high. Crossing 25 implies strength of the trend, and it's not directional, right? So the blue line, it transitions from blue to green when it's in an uptrend. This is the positive directional index. Positive directional index above the negative red directional index and above the average is a showing of strength. And when the average is rising, that tells us that this is a strong uptrend. It's starting to get into like an exhaustion level, and it rolls over in December of 2024, but that's not the high of price. That tells us that the trend is exhausting and weakening, and we should be prepared for a reversal. And that reversal starts to come, boom, into the cycle low, right, into the trough of the cycle. Then we have what's called a left justified cycle, or left translated cycle, where the high occurs in the early part of the cycle and it starts to draw down. These are very bearish, right? So you want, if you have a right translated cycle like the one that preceded it, those are the most bullish. So that's where we'll look at trend. With trend, we're also going to look at point and figure charts. So I'm talking a lot about timing, but point and figure looks at increments of price independently of time, and it just tells us what the trend is doing without time as a factor. This is really helpful when we have charts that are in very long consolidations, or charts that have made a really extreme movement and we don't know if that's exhausted or not. I like to use them with a percentage instead of traditional or average true range. So I'm looking at 1% of price movement to fill each box, and I'm considering 3 of those boxes to be a reversal. O's are your downtrend, X's are your uptrend, and it's going to fill in one box, like check each box for 1% movement in that direction. And then when that direction changes, you're going to start getting O's for each 1% drawdown, right? And then it automatically populates that 3-box reversal. So in this case, price right now is at 257 for ADP. On the point and figure chart, this downtrend does not reverse until we get above 260.88. So once we're into the 263 area, then the point and figure chart would tell us this is now moved from a downtrend to some form of uptrend. So that's trend. Then we're looking at relative strength in 2 ways. In the middle, we've got this is a momentum indicator that's the relative strength index, and it measures price, the strength of the momentum of price relative to itself at a point in the past. And when it you get a breakout above 65 to 70, that goes into a bullish regime. You want it to have ascending moving averages with it and maintain those moving averages, and you've got yourself an uptrend. If it falls below 35 to 40, now you're into a downtrend, into a bearish regime, and those have a white background. The bullish regimes have a blue background. And then when we get an oversold condition like we had back here during the COVID lows and in November of 2025, you get RSI below 25, below like 30 into like the mid 20s. That's an extreme oversold. People tend to think these are buying opportunities. This is very extreme, so that can be a buying opportunity for some systems. But what we need to be careful of is, you've got we've got some in the past here. So you've got like a low in RSI back here in 2008, and this one coincided with the low. So that's a buying opportunity. You've got an extreme here, didn't get the color coding, but you're all the way down to 26, and that's only midway through the drawdown. So usually what happens is an extreme low in RSI is a change in trend and can precede the actual low. So we need to be careful when using extreme oversold as a signal to buy. These can be these can precede a larger price drawdown. And then lastly, on relative strength, the bottom is what's called the relative rotation signal. And so this the green line is strength relative to the S&P, and the red line is the momentum of that strength relative to the S&P. And in this case, we've got strength relative to the S&P inclining, and that's good, but you've got momentum of that relative strength is very weak, and that's happening as the directional index, the trend strength indicator is kind of flattening out, and we don't have very strong momentum of strength relative to the market, and that's our warning that this might not be a very strong trend reversal. And so that's relative strength. Last but not least is psychology. And when we say psychology, we're just, this is very simple price behavior, right? You've got 2 indicators that we'll use for psychology. There's the volume profile is the quantity of buys and sells that occurred at each price level. And that's this indicator on the right. It draws a line through its most dense area. It recalculates to everything that's visible on the chart, and we have what's called a gap right here. We'll see this in many of the instances with volume profiles where there's just very little price activity, price history in between the 288 level and 261. And so what happens in those is, like, you've got a support area and you can see price comes down, it's testing it, and then when it fails, it falls very quickly down to the next dense area of support. And that's important to be aware of. It can do the same thing in recoveries, but more often than not, it's going to try to fill this area with some behavior. And then the second indicator that we're using is the anchored volume weighted average. and we can find that in drawing tools, anchored VWAP, and I place them at highs. I like to use red when I'm placing them at a high. I normally place one at a low, but in this case we're just going to focus on the ones from a high because we're talking about stocks that are in in an area of value. They're undervalued, and that means they're in downtrends. So we're going to look to see what kind of behavior the crowd will exhibit when we shift from downtrend to uptrend. So when we look at anchored volume weighted average price, I don't use any of the bands. I use standard deviation, and I use open, high, low, close divided by 4. And so what this is telling us is from this high back here in June, everybody who bought is now, the average buyer is operating at a loss. And what we see when these are, these anchored volume weighted averages are descending like this is price attempts to recover. It hits that average weighted line, and the participants in the market are looking to cut their losses and exit. And that happens over and over again. And so now we're way below it. Price is starting to recover a little bit, and now we can do the fun part and start to get into our scenarios. So, what we're going to be what I would look for is evidence of a recovery in ADP, and an uptrend is, we had this left translated cycle. It came right after a right translated cycle, and we've now come up to a cycle trough. That doesn't automatically mean that we're entering an uptrend. This cycle could be either, centered or right translated if it's going to be a bullish scenario. So if we're going to do something bullish, I would expect that we probably, get up here, test. We've got this little wedge here in the volume profile. This anchored volume weighted average is going to start to trend downward. So we're probably going to come up, have a little fake out, come back down, test this part of the ledge in the volume profile, and eventually test that anchored volume weighted average. The first test most likely will be a failure. Getting above it would be very bullish. And then eventually we want to see it get up above, test that, break above that anchored volume weighted average, come down and retest it. That's our evidence that, a successful retest that we're going to be in an uptrend. And then eventually we want to break through, if we're going to make a new high, we're going to have to break through this dense area of volume. But the anchored volume weighted average, once we get through that and retest it as support, that's the evidence to me that the buyers are now overpowering the sellers, and the buyers are regaining control of this asset. If we're looking at it from a timing standpoint, I would look for that scenario to see some of that evidence probably between April and the 3/4 of the way through the cycle, maybe June timeframe. Seasonally, we know that's kind of a tougher time in the year for stocks. Once we get past July, we usually have the summer doldrums and then the September low. So, and we know that September low coincides with the next cycle trough. So, we could be looking at more than one battle with this AVWAP, but I don't see this as shifting into a compelling uptrend in the near term. If we look at it, we looked at we turned in the point and figure already. So I think that's enough on ADP. I spent a lot on that one because we wanted to go through all of the tools, and now we can go through the others a bit more quickly. So Dividend Crab took a look at AWR, which is a dividend-paying utility in water. When we look at these, you've got this is a really wide consolidation. And so you've got kind of a rectangle pattern, but on the downside is, when we form a rectangle, what we want to see price do in a rectangle is start to operate in the upper half, right? So you come up, you start testing, each section of the triangle. This is good. It made a higher low. We would have wanted to see that make a higher high or match the prior high, then come to the mid part of the rectangle before testing, and then you get a breakout retest. That's the kind of behavior I like to see with a triangle. We're actually kind of getting the opposite, and we're going from extreme low, extreme high, put in the higher low, but now we've got a lower high and a lower low followed by a lower high, and now you're kind of consolidating into a series of lower highs and higher lows. This is a bit more of a momentum squeeze. So it's really unclear what kind of behavior we should expect coming out of this consolidation just yet. From a cycle standpoint, we're just past, timing-wise, the cycle trough. Let's take a look at trend, where you've just kind of got this rolling over behavior in price, and the 65-week moving average is confirming that you've got, your uptrends are immediately reversed, and so what I'd want to see is this 65-week moving average flip. I want to see us get above the volume profile and hold that. We'll take a look at the anchored volume weighted average. We'll go to the 2022 high, and you can see that we've just had challenges with this. So that anchored volume weighted average is very close to where the volume profile has its point of control, that center line. ADX is climbing. It's still rising while we're in a downtrend, and that tells us that this downtrend still has some strength. The RSI has been in a bearish regime, and the strength relative to the S&P is positive, but it's rolled over and its momentum has not gotten above 100, so its strength relative to the S&P is relatively weak. And we're at the bottom of this dense area in the volume profile with a big gap that goes down to 55. So if I'm looking at this for my portfolio, I want to see what it does throughout this next cycle in between now and the early part of March. I'm thinking that we probably, if it filled this area and then climbed back out of it after the March time frame, got back above that anchored volume weighted average and into this area, I think that would be really strong evidence of an uptrend, and probably a really strong showing for the cycle period in between March and September. But this right now to me is not compelling from a trend standpoint. It says nothing at all about the fundamentals of the company. This could be a very good long-term investment, but we need to be open-minded to the possibility that this comes down and starts to fill in some of this lack of price history from when it had its dramatic rise in 2018. So that's AWR. We also, the next one Dividend Crab looked at was OKE. I'm in this one just for transparency's sake. I joined this one during the COVID low, not because I'm smart. I just happened to be buying it at that time frame. I actually bought around the highs before the COVID low, and this is where I did a really deep dive into their fundamentals, and I do think this is a very fundamentally strong company. They navigated that COVID low very well. So it's a strong management team. They were able to restructure their projects and expenses and ride out that down period. And this was like a generational buying opportunity. I think I've got like a 600-700% return and a pretty decent position on it. They have not been increasing their dividend like they used to in the past. So that's a risk to be aware of, especially since it's not attracting new fundamental money in the fashion that it was during this time frame, and it's certainly not a compelling case for the short-term traders. This one will be influenced heavily by the energy cycle as well. So looking at the behavior on the prior one, AWR, we didn't look at the point and figure chart. So in the point and figure chart for AWR, we would need to see a move above like 73 to indicate a purely on the basis of price a bullish reversal. So looking at OKE, this one's pretty interesting. So you've got this lengthy cycle for OKE, and we've put in our cycle, a right translated cycle, and made our cycle high back here in the fall of 2024. We anchor our volume weighted average to that. We're rejecting at it. We're below it. It's descending. The 65-week moving average is lost at in the first quarter of 2025. That's descending, and we're now testing support at the point of control. You've got a kind of flat but rising relative strength to the S&P. It's above the S&P right now because some of the energy names have done well. The momentum of relative strength is still below 100, so it's not compelling, but it's now curled upward. I like the way that our momentum on the relative strength index has kind of gradually flattened out and formed a base. Sometimes this will tell us what price is going to do. So it's basing and rising. Price probably bases and rises up into the July time frame, but it's above now broken above ascending moving averages, and it's a little bit difficult to see, but you've got the faster moving average is broken above the slower moving average. So that's a healthy sign for the direction of momentum. This is still a bearish momentum regime. We want to see this take a movement above like at least 65 to tell us that we're entering a bullish regime. The directional index is rolled over and falling. It's still in an area of strength for the downtrend. We want to see that come down, and we want to see the positive directional index overtake it, and that hasn't happened yet. So OKE, I like this name. I'm going to stay in it. I'm not adding to it until I would see, I would say we want to see it get up here, retest that anchored weighted average. You can see we've got a little bit of a gap in here. Probably comes back down to the volume shelf somewhere, or volume profile point of control somewhere around the second quarter time frame. Probably takes one or more tests against that anchored weighted average. And so we're looking to see a series of higher highs and higher lows that eventually bring us up to retest that anchored weighted average and last area of support in the volume profile around 81. So I'm thinking like a show of a breakout and retest of like around 81 would look good to me on a weekly basis. The point and figure chart it shows us breaking above a descending trend line, but we're now have a series of declining segments of price from 75 down to 72 where we are right now. So we would need to be above 75.21 on the point and figure to start considering whether or not trend is showing a bullish reversal, and a breakout would come at the 77.50 on the point and figure. So between like 77.50 and about 81 with the retest is where I would consider OKE to be trend following into a reversal. And that's like a basing pattern. Sometimes we also see a retest of a prior high like this, and you form like a cup that has a duration of 1 quarter. So that's OKE. Then the last one that the Dividend Crab looked at was AMT. Full disclosure, I'm in this one as well for a different purpose. And this is a very strong downtrend. So the REITs have been absolutely killed. They're great dividend payers. They tend to kind of move with a narrative of the industry that they're associated with. AMT is a REIT that is in the cell tower space and is AI adjacent. And that doesn't seem to be helping it much, right? So we can take the, let's clean up some of the, this is a harmonic range. I'm not going to go through that today. That's how I forecast price. For shorter term trades, this is the short term trade that I'm in. I'll talk about that a little bit, but let's start with the anchored volume weighted average from the high, and this is the high back in 2021. So this can be a little bit challenging because you've got these movements above it, but then they fail right away, right? And so that tells us that there's not a lot of conviction in the recoveries. You want to see it hold, right? And we got faked out a little bit here in 2024 where it looked like we're getting a higher highs and higher lows. It's very steep. This is a strong uptrend, and it ends up being centered in the cycle, right? And it comes down and retests that anchored volume weighted average from all-time high, and then falls through it and fails. And so this is where we want to use them from the lows as well. I like to color green from the low. So we're starting to get a little bit busy on the chart. So I'm going to turn off the 65-week moving average. But just for example, with American Tower, you get in here and you've got this one as well. You got above the anchored volume weighted average in July of 2024, retested it as support and moved higher. This told us like, hey, maybe we're going back into an uptrend for it. When it fails, and then subsequently the one from the prior low fails, now we've got a bearish scenario on our hands. So let's take a look at, we'll turn that 65-week EMA back on. That's declining, rolled over hard. We're below the point of control. Hide that. We're below the point of control in the volume profile. This is a very strong downtrend. We're going to probably need some recovery in the entire sector for REITs, whether they're AI adjacent or not. But this is concerning price structure to me. You've also got, you had higher lows from 2023, 24 to even the end of 2024. So even though we fell through these and into this cycle low, we were putting in higher lows. And so we could have looked at this as like an extreme buying opportunity. Like, hey, we've got a higher low, so that implies maybe we'll see a higher high next. And now we've got lower highs and a lower low. We've taken out the 2024 low. So that's fairly bearish. Now this could hold, and we could start to get back in here. We're in the, in the first third of this, first quarter of this cycle. So if we're looking at a right translated cycle, maybe we get some behavior like this, into the anchored volume weighted average from July of 2025, retest of an area of support on the recent price action, and then above our point of control, tested as support. But I'm guessing that by the time that we get to this the right half of this cycle in the mid 2026 standpoint or time frame, we're going to be near the anchored volume weighted average from all-time high in a dense area of volume in the volume profile. We know that there are a bunch of sellers in here that have been just cutting their losses for years. So that's the group that we need to battle through. Maybe we get a, they win that one, we fight them again, and then we start to get a scenario in the next cycle where we can start to overcome this downtrend, and that would be a really nice kind of basing pattern that we climb out of. So a lot of times we don't win these fights right away between the bulls and the bears. What we need to be aware of on the trend side as well, the ADX is steadily rising with the negative directional index above it. So this is telling us that this is actually building strength in this downtrend, and it tells us the scenario is more hopeful than realistic. Similar look on a lot of these. You've got positive relative strength relative to the S&P, but the momentum of that relative strength is real weak, even though it's curling upward. That's about as weak as it can get, and so that tells us this uptrend probably doesn't have a whole lot of strength. On the relative strength index, it's putting in a lower low in a bearish regime, and it's below descending moving averages. So I'm going to say, as a company, AMT could be fantastic. It's always easy to say a company's going to be around for a long time. It's not going anywhere. But I'm a trend follower. I'm looking for things that are going somewhere. And right now, I'm going to want to see this equity, along with other REITs, battle through this selling pressure, and it's probably going to take several months to do it. And then we'll take a look at the point and figure chart for AMT. This is still what we've seen in the other charts, independent of time. It's in a downtrend, and we would need to get above. I'm going to say, because you've got this descending trend line, and a series of lower lows on the movement of price across the point and figure. We're probably going to need to see something above 187, between 186 and 188, before the point and figure would suggest that we're have reversed to an uptrend. So that's ADP. AMT. And then lastly on this one, so the reason that I had this one charted already is because I did an update in a video in December. There's a scenario where equities make new 52-week lows during the last quarterly options expiration. And so once a quarter, we have an options expiration where options expire for futures, individual stocks, equities, or individual stocks, ETFs, and indexes, all on the same day. And when we have the last one of those in the year, this year I think it was the 19th of December maybe, stocks that make a new 52-week low on that last quadruple options expiration, those tend to have a bounce back. It's an oversold extreme, and so it's a mean reversion opportunity that I take advantage of once a year. And those stocks, so it made its low that would have been this low on the. I'll actually go and look at it. So that would have been Friday the 19th is when it made its low. I go into it on the following Monday, and usually over the course of 2 months, those have an opportunity to have like a 10% bounce back, anywhere between 2 to 6 weeks. Very high risk type of play though. About like third of them break even, a third of them have a slight loss, and 1/3 go on to make like a between a 7 and 15% opportunity. So I like to play them, and AMT was one of them. But what's important to this analysis is that the equities that we see make that 52-week low on that last options expiration, even though they're a short-term mean reversion opportunity, they tend to underperform the broader market for more than a year afterwards. That's a pretty extreme negative sentiment when they show up as a 52-week low on that last options expiration. Generally means that participants at all levels in the market took a loss on it at the last minute, and they have a really tough time justifying getting back into it. So Hershey was an example a couple years ago, and I've got a lot of drawings on this one. But Hershey was an example a couple of years ago, and you can see it's like struggled to get out of that downtrend ever since. I'm not saying that AMT is going to take us decades to get out of there just because it made that low. AMD is an example that would be the exception. They went on and recovered their trend in less than a year after making a low on that extreme. But just to be aware of that for AMT, that's where we saw it. Then we get into Dividend Stockpile, Jeremy's picks, and we'll start with Accenture. This is one that I've been in the past. Check, make sure I have all 4 of his. Yeah. So Accenture is one that I've been in the past. I'm not in it now. They tend to have high correlation to the IT industry and tech growth narratives. So let's take we'll put our anchored volume weighted average, and let's start with, looks like I didn't do a cycle on this one. Let's do a cycle. So we'll take a look at the cycle analyzer. We've got a dominant cycle that's a 390 day. The last time that it troughed would have been October 31st. So we'll go daily. Cycle tool. $390. October 1st. And we'll zoom back out to the weekly view on this one. So we've got this is another one that's in a sideways consolidation, and it's forming a rectangle. We've got, it's testing the, not real wild about where it's testing the bottom of that rectangle. So you've got, puts in its high into the rectangle, and then it's got a lower high. Looks like it's going to start to recover, and now we've got a lower low into this triangle. So that's triangles are really strong patterns. It's one phrase that you'll hear from technical analysts is wider the base, the higher the space. And so when it does break out of this thing, you can expect a move that's in proportion to the width of the time that it's spent consolidating. But we need to see that recovery first. So we're below our anchored volume weighted average. We're below the point of control on the volume weighted profile, but we're retesting both of them, and it looks like we could be retesting the declining 65-week EMA, and our low came right at the cycle trough. I have to be careful with that because the cycle indicator could be the cycle analyzer could be a little bit skewed by the most recent price action, but I'm seeing some positive signs on this one that I like a lot. So you've got the average directional index has peaked and rolled over with the negative directional index below it. So this downtrend is weakening. We don't have evidence of an uptrend yet on that's being reflected in the strength of the trend with the ADX, but and we're below, which makes sense because we're below moving averages and rejecting at them currently, right? So it's it's certainly not there yet. It's just taking a profile of something that's fighting in the direction that we want to see it challenge. That low comes down to test, nearly down to retest the COVID lows. It's actually putting in a higher low above the retest of the COVID lows. So that's, slightly bullish sign for us. It's not dipping back into those COVID lows. Our relative strength indicator, we'll start with RSI, is above its moving averages. Its moving averages are increasing, inclining, so that's good. When we look at oversold RSI, so we don't have an extreme oversold, but we've got a very low, very oversold reading, and again the price low doesn't occur on the first low of the RSI. Price low comes in, you've got another extreme low on the RSI, and now we've put in a price low after it, and so price makes a low while RSI is rising. We've got a condition called a divergence, and in this case it's a bullish divergence. So price falling and RSI rising, that's a bullish sign, especially when you've got RSI retaking its moving averages like it is. Relative strength to the S&P, it's a nice strong movement above the 100 line, and momentum has curled and taken a steeper move upwards. We want to see that get up above 100 like it did in the past when we had these really strong uptrends, but that's a really bullish sign for us. So we've got some early indications of a recovery here. This is exactly what we drew on some of the other things where we said, hey, I want to see it come up, test that anchored volume weighted average in the EMA and its point of control. It's probably going to come back down and test this more dense area. It's doing so in the first the early portion of its cycle, so it probably comes back down. Get a little bit of a battle here, and then if we get above it, we've got this dense area of volume in the volume profile. We probably if we were to see a test of support, it probably comes back down from there, retest these moving averages, and now we get a situation. Once we've done that, this is a situation where the average buyer we've moved from the average buyer being at a loss to the average buyer being in profit, and that's when we're you can actually get into like a price discovery type of price movement when that happens, and that's when we challenge the top of that rectangle and start to have a breakout. So if that were to occur, I would look for us to have that battle with the sellers in between now and probably April and June, and see how that plays out, and that's where I would look to be trend following with ACN personally. We'll take a look at the point and figure chart and compare this to AMT, right? So compare this to AMT, where you've got this descending trend line in the volume in the point and figure chart, and even though it's starting to rise, it's got to get back above its prior levels before it can get up here and test its trend line. When we look at ACN, we've had this breakout in the past at the 255 level, and it's put in this choppy price action to come back down and retest the breakout at a rising moving average in a rising trend line in the point and figure chart. So this isn't exactly a bullish breakout or a buy signal on the point and figure chart, but this is a healthy sign. This is a retest of a breakout, and we're going to want to see price get above, in the point and figure, it would consider 280 and above to be a breakout, and that would be bullish for us. So I like ACN. I would probably, of the ones we've looked at so far, I would put this a bit higher up on the list if adding this to my own watch list. Next, Jeremy looks at RMD, ResMed. So I've charted this one a bunch of times. I'm actually going to, just use the charts that I've already looked at. This has moved into like an uptrend recovery, and this is what I like to see from basing patterns. So we've got a long base, and oops, wrong one. And so we can measure the time frame for a base. We've got bases are really similar to cycles. We've got a 206 bar basing pattern. It's not broken above it. A breakout from the base would occur at 292, but we're looking at this 206. Usually, if this is going to form what's called like a cup and handle, we would see that occur over the course of 1/4 of the length of time that it took to form a base. That would be about 1 year, like 52 weeks, because it's a 206 bar base. And so put the anchor volume weighted average in here. And so in this case, we could use one from the low. I said I wasn't going to do lows, but this is the type of behavior that we see when we're climbing out of a base. You've got a anchored volume weighted average from the low. It comes in, it's retesting it, it's reclaiming its 65-week moving average, breaks below it, but retests this anchored volume weighted average from the low, and it breaks away from it and leaves a gap away from it. And now you've got a anchored volume weighted average from the high. We can move this one up to the April low, and it's fallen back below it. So that's a little bit bearish, but we know that we're testing the 65-week moving average and the point of control on the volume profile. This downtrend, I would consider this a secondary downtrend in the context of a primary uptrend from the lows in October of 2023. Again, we can see the extreme oversold in the relative strength index in October of 2023. And then it makes its price low shortly after it, and the relative strength index gets above rising moving averages. And you've got this sequence where you've got a strong downtrend, negative directional index is above the ADX, ADX rolls over, and then the uptrend starts to take control. Now we've said we want to see strong ADX, but as long as the positive directional index is generally above the negative, in the context of an uptrend, that your trend might not be overly strong, but it supports an uptrend. So now you've got your, that uptrend was a bit more extreme back here in 2025. In 2025, it rolled over. Negative directional index overtook it, but it's kind of flattening out and weakening. Your RSI is in a bearish regime and below its descending moving averages, so that's not favorable. Relative strength to the S&P and the green line is below 100, so it's weak relative to the S&P, and its momentum of relative strength is falling. So it's essentially not giving us a buy signal right now, but it's come up to retest a base. So I'm thinking that if I'm interested in this one, we want to look for this to hold as support, and definitely not take out the 2025, the April 25 low. We want to make sure that it stays above 213. Like a move below 213 is likely a retest of the lows in general. So we want to make sure it's putting in a higher low, but ideally, we test this anchored volume weighted average maybe we get one more test or even halfway to it of the volume profile above the anchored volume weighted average, retest it, and then we're going to probably complete that cup and handle sequence. And when we complete a cup and handle sequence, the next thing that we do after it is we break above it, retest it, and then we can really take off. I did a measured range on this. This is like the way I take a proportionally measured range from a base, thinking we were getting this breakout before, and instead we get a little fake out. So this is the fake out. Maybe we get a little bit of a shakeout down here, and then we get the actual breakout. When we do get that breakout, it could head up to between 357 and 373 is where I would forecast the next top of a move, just based on the proportions of this basing pattern. So I really like basing patterns. They're a big part of the shorter term part of my process, and if I was looking to build a position in RMD, I would look for it to exhibit this scenario for me to trend follow my way into it. And once I've done that, I can take profit in it, and I can leave a partial position that has just a very, very low cost basis. And that's the way I really enjoy owning a dividend stock for the long haul. So we're getting close to an hour, and we've got 2 more to take a look at. MKTX, this one was cool because you know what? Before we move on from RMD, I did not do a cycle on this one, and I think that was intentional. So RMD, because it's in this, it's had a steep incline. What the cycle analysis is going to do is it's going to tell us that we're, it's probably going to anticipate us to move lower, just on the composite math. So it's suggesting that we've seen a top, and it's not anticipating that cup and handle pattern that we talked about, which it would have done back here as well. Well, actually looked okay back here. So it's got the cycle with the highest stability scores, the 346. It's actually got the strongest fit for it as well. A little bit weak of a correlation, but the trough of it would have been back in March. We'll just take a look at it just for fun. So we take, what do we say? We said that's 346 and March 18th. $346 and so the analyzer predicts anticipated the March time frame to have been a cycle trough, and this would have been like a left translated cycle coming after a right translated cycle. That would imply a more bearish outcome to this. So that's where we want to be aware of more than one scenario, right? We know that we've got a left translated cycle after a right translated cycle. And from a timing standpoint, a cycle trough coming up, look at that, right at 1/4 of our base, anticipating it in the July time frame. So if this area fails and the 213 area does not hold, we would want to be prepared for price to move down into these lower levels. But we would have to forecast that after we saw it, and then look to see what it does after the end of July. So if we're not reclaiming this anchored volume weighted average in between, say, now and April, I would say this is probably at higher risk of another test of lows before we could get too excited about buying it from a timing standpoint. And again, if we're taking a fundamental company and we're buying it at an optimal time, that's a really strong opportunity for our portfolio. So we're getting growth, short-term growth, and building a fundamental position at the same time. MKTX, really liked this because this was not on my radar at all as a company. Did not have it on my watch list, and it's on there now, and that's why I like to see ideas from other individuals, especially when they see the market from a different perspective than my own. So taking an anchored volume weighted average from, I'm going to take it from the all-time high, and we'll take one from, oh boy, from the last time that it tested this 65-week moving average and failed. And so MKTX is this is a pretty strong downtrend. It occurs right here at a cycle trough. You're below your anchored volume weighted average in a descending 65-week exponential, and we know that we've got the anchored volume weighted average from the all-time high is descending. It hasn't been tested since 2023, and it's starting to align with an area of density in the volume profile. So we've got the extreme oversold in relative strength that's bounced and is now above a rising short-term moving average. Strength relative to the S&P is somewhat strong. It's above 100. The momentum of it has curled and is turning upward. These are smooth moving averages, so it's reasonable to expect follow through once you see them curl like this. So we could be looking at a nice challenge of these overhead moving averages, and we're early into a cycle, so it's possible that I'll redraw this one. It's possible that we see something, a scenario along the lines of come up here, come back, test that anchored volume weighted average, retest the lower high. The higher high that we just put in. So if we look for a higher low, higher high scenario, get back above these, retest them. I would say for this next increment of its cycle, the best case scenario is probably a retest of the anchored volume weighted from all-time high. A scenario like that would start to form what we would consider to be like an inverted head and shoulders. And again, I'm just looking for scenarios that I would know how to work with. If I saw something like that with a breakout, that would be really bullish for this cycle that occurs in between August 2026 and June of 2027. And so if we're patient, and there are other opportunities in the market for us to pursue right now, if we're patient and we keep this on the watch list, and we see these behaviors play out between now and June, I would say that sets up for like a 10-month long bullish opportunity once we get above. We set up that inverted head and shoulders, and then get above that anchored weighted volume average from the all-time high. That could be just like an insanely bullish scenario for that 10-month time frame out into the future. And so I'm prepared to be very patient with an interesting opportunity like this, and I also want to spend a little more time with it because it's so new to me. It was literally the first time I'm looking at it. Average directional index peaked right at the cycle trough, with the negative directional index falling and the positive directional making an attempt to recover. So this tells us the downtrend might have exhausted, but it's likely not over yet. Our evidence of that would come in the form of like this falling, curling up higher with the positive directional index overtaking it. And then we'll take a look at the point and figure chart for this one. This is nice because you've got this is actually a bullish breakout from a descending trend line. It's reversed from it, so this tells us that we want to get above 186 to consider this a resumed continuation of an uptrend. Without it, we're starting the path back down. So patience is always warranted with names like these, but I like this one to keep on the watch list for a while. I would probably put this as second highest on the watch list for the ones that we've gone through today. And last but not least, we'll take a look at TROW. So this one's wild because starting with the point and figure, we're in a triple top breakout. And I love that this is last on the list because this is the type of name that really puts buy and hold fundamental investors to the test. And this is possibly one of my favorites to try to take advantage of when I see see capitulation and a reversal. So let's take a look at TROW. So you've got, we've had our bullish reversal. That would have occurred when we got over 106.5. So right now it's in what's considered a triple top breakout. These are very bullish for point and figure charts, but the caveat is I find higher success with these when they're accompanied by a strong directional index, and that this name has not come up on my screener where I look specifically for double, triple, quadruple top breakout and strong rising ADX. So let's take a look at the TROW chart. We've been forming a base from June of 2022. So we had the high in the fall of 2021. This is when the Fed comes out with their rate decision, and this name just plummets from here, and it stays in a sideways consolidation. They pay a growing dividend. This attracts, is attractive to people in the fundamental value investing space, but we can see, I'm going to turn off the 65-week EMA. Actually, we'll turn off the drawings first. So when looking at this, the point of control is right here through the center of all this volume. This is our consolidation pattern, but it's also where we had a lot of strength of volume before the breakout. So when we're breaking out of a consolidation, we see higher lows, higher highs. We had the dip down in COVID that took out the 2018 high, but then gets back above the 65-week EMA, tests it. You put in a higher high relative to the pre-COVID high, and that's when you get this steep incline. Now we're below, we got below a falling 65-week moving average. Price rejects it. This is a pretty rough story throughout 2023. We get a little fake out in this sideways movement in the 65-week exponential moving average. Right now, that 65-week moving average is flat, so it's not helpful to us at all. So I'm going to turn that off altogether. We want to see price start to incline in that 65-week moving average, rise on an inclining basis behind it. It's going to be a confirmational signal at that point and not a leading signal. We've got, you consider this, if we consider this a rectangle, you've still got those lower lows into it. So we want to get above the midpoint of this consolidation, and somewhere in here see a higher high. Turn the drawings back on. We've got this is actually a perfect tool to use with cycle analysis, with automated cycle detection, because it's been so flat for so long. Flat cycle, flat price movement really benefits. It's almost like a detrended data set for automated cycle detection tools to use. So we've got a roughly what's that, like a 38-week cycle average or cycle time, and we saw a trough back here in May. We're at the midpoint of the cycle, and we haven't put in a new high yet. So it's possible that we're going to see some type of right translated cycle if this thing were to do something bullish. But man, this has just been bearish for so long, and you can see you've got this anchored volume weighted average and the crowd psychology, right? The crowd, every time this average buyer gets anywhere close to this anchored volume weighted average, the average buyer is looking to cut their losses. And so each one of these are buyers having a battle with the sellers, and they're never winning it. We break above, we immediately lose it, right? So so now we could even drop one at this. I know we said we weren't going to do ones at the lows, but what does this tell us right here? We're squeezing. This is a squeezing behavior where you've got your most recent buyers from the low back here in April of 2025. They're defending and adding to this position every time it's retesting. So an Elliott wave, you could consider this we're looking at like a 5-wave up, where you're going, 1, 2, 3 with this exhausted wick high up into the anchored weighted volume moving average. This violates the Elliott wave rule, so I'm gonna throw that out, because your wave 4 down should not fall below your wave 2 up. So this is definitely not an Elliott wave, 5-wave up. So we have to be careful with this one. You've got your squeeze in between the anchored weighted volume from all-time high and the one from the low. So we need to see this one from the low hold, and the behavior that I would want to see is, test that anchored volume weighted average from all-time high, put in a higher low, get above it, test it as support, and then move higher. And when we have, what we'll see, right, is when you have drawn out sideways movements, like steep declines generally are followed by gradual recoveries, right? And gradual inclines can be followed by steep declines by gradual recoveries, and then once we've gotten through this lengthy battle between bulls and bears, we could see another very steep movement in TROW where like everybody has capitulated out of this thing, and we could see a steep movement somewhere where up into in between the base and probably something like 2/3 of the way to the prior all-time high. I would say that's on the table for a basing pattern, and we might see it. It's come down, forms its base, and then it probably puts in a shallower top of a base, a cup and handle pattern. Get out of that, and then that came out awful, right? But once we get out of that cup and handle pattern, then we've got an opportunity for probably like 1 to 2 cycles where we re-challenge the top of this base. So this isn't a buy for me yet, but I'm actually going to move this up on the list because it's frustrated so many folks in the value investing space, and they've just been punished by this name, and we're now we've got like one last shakeout, hopefully, and if we see the break above that anchored volume weighted average and retest, we could be in for a nice shorter term move. But I would expect it to take like a cup and handle type of formation while this name tries to pull confidence back into it. You've got the average directional index for the downtrend declining with your positive directional index retook it, but it's relatively weak. This is a great one to look at for an example of extreme oversold in RSI not being a buy the first time you see it, right? You've got this massive downtrend rejecting into the AVWAP back here in January of 2022. You get your extreme oversold in the RSI, and that's nowhere near the low, right? You're at 138 still, and price bottoms, like hopefully that's the bottom at about 78. It continues to put in lows afterwards, and you've got this lengthy now bullish divergence, and the important thing to keep in mind with divergences is that they're a condition and not necessarily a signal. You need to see other activity accompany them. So I generally don't make decisions based on divergence alone. Creeping up above the strength relative to the S&P, but your momentum of strength relative to the S&P is just kind of flat and not doing much. So this isn't real compelling yet. This tells me that we're probably not done battling this AVWAP and should be prepared for a little bit of frustration in here before it takes off from this. This is a good candidate to use like some type of momentum tool, like a Bollinger Band squeeze or something like that. Let's actually see what the Bollinger Band looks like. So yeah, that Bollinger Band is tightening up, which is exactly what we just saw. Keltner channel is Bollinger. Okay, so let's turn the drawing tools off. And just one last thing that we'll look at on TROW. This is a Keltner channel. And one method of looking at volatility squeeze is to look at Bollinger Band and Keltner channel. They're each calculated a different way. Keltner channels are probably better for like Forex and things that move in a more distinct range, and Bollinger Bands have like this bulging and tightening process that they go through. So they're each constructed around a centered line, but the Bollinger Bands will tighten up when you've got compression, and that's exactly what we were just seeing with the anchored volume weighted squeeze. So your Bollinger Band is inside the Keltner channel. And you can see, looking at the history, typically the volatility of a stock will create an upper and lower Bollinger Band that are outside of a Keltner channel. So it's not often that you get them inside. And when we do, that's a squeezing condition. And then once the Bollinger Bands expand and expand outside of the Keltner channel again, you have a strong trending movement, and it's typically going to continue in the direction of that breakout. So this is very compressed, which we saw with the other tools that we were using, and a movement either above this anchored volume weighted average around the 115 area or below the $100 level of support is probably going to see some strong follow through. My guess is, using the point and figure chart, that we're probably closer to a bullish movement than another bearish movement. Maybe that's influenced by rate decisions or something like that, but we're almost midway through this cycle, which would be like the early part of February. I would look for, if this is to be a right translated cycle with a bullish finish, for that to occur somewhere around the mid-June to mid-July timeframe. So that's my thought on TROW. I'm actually surprised I'm going to move that higher up onto the list. I'd say if I were to score these for opportunities for something on the technical side, what do we say? RMD looks interesting. It looks like one that we want to move to higher up on the list. Accenture, TROW. So appreciate Dividend Crab and Dividend Stockpile, DGI Crab and Dividend Stockpile for sharing their ideas. Hopefully they're not too annoyed by me sharing my take on them and timing perspective. Hopefully this is complimentary to people that are interested in both, and I'll share links to each of their channels in right up below. So thanks guys, and have a great day.